8 Psychological Tricks to Master Before Investing Your Money. People think investing is easy. Like you just buy a stock market index fund and all your dreams come true. If investing was that easy, we'd all be millionaires. What makes investing hard? Your psychology. Your brain treats money as a game. Your brain loves to endlessly tweak and optimize stuff for shits and giggles. Mastering your brain is how you master your money. Success in one area of your life that can make you act like a drunk. Your ego can think you're going to rule the world. Visions of Lambos and edgeless pools can overcome your imagination. Your psychology can play tricks on you when it comes to investing your money. Master these psychological tricks. 1. You will always wish you invested more. When your investment is well, you think everything would be wonderful. No. No matter how big the financial win, you will always wish you invested more money. I see it now with Bitcoin. I know people who are sitting on 6 figures of Bitcoin. But they still wish they had invested more money when Bitcoin was $1,000 per coin so they could now be millionaires. But then again, when is enough, enough? Like if I had $10 million in Bitcoin, would that be enough? The trick to understanding your psychology is you will never invest enough money in an asset that performs well. Your mind will always come up with more reasons why you should have invested more. And they won't all be bad. 2. Risk what you can lose. Financial risk keeps you awake at night. You want money to buy you a good night's sleep. The psychological trick to investing is to invest money you can afford to lose. It doesn't mean you'll enjoy losing your money. But if you can risk money you can afford to do without, then you'll be far more careful with your choices. It's when you invest money you can't afford to lose and risk ending up with nothing and starting again that the real problem starts. If you don't know how much money to invest, then think about a number like 5% or 10% that won't wipe you out. 3. Ease your way into the asset. A psychological investing trick is to slow down your brain. Going all in with an investing idea is dangerous. Slide yourself into an asset slowly using dollar cost averaging. Decide on a total investment dollar figure. Divide that number by 12 months. Invest slowly each month to even out the ups and downs. 4. Take out the initial investment. I used this trick with Bitcoin. When the price exploded, I took out my initial investment. Now all I have invested is the upside, so I couldn't give 2 hoots if it goes to zero as the doomsdayers predict. When your investment is well, you have an opportunity to take out the money you initially put in and reset your psychology at the same time. If your psychology is free, your money is free to do its thing. 5. Don't chase big gains. Investing for big gains is a loser's game. You will lose if you try to go big and you're not a professional. And even if you are a professional investor with a finance degree, you're still highly likely to make one bad decision that wipes you out. You don't get rich overnight. You get rich slowly. Rewire your psychology to think over the long term. Let patience guide you to financial freedom, not desperation. 6. When the price drops more than 10%, you'll be tempted. The March 2020 crash in the financial markets was a psychology test. The weak hands sold. The overinvested were forced to sell assets to cover their margin calls. The long-term investors utilized a different psychological trick. They bought the dip. They bought the dip because they understood what they bought. They took the time to understand the underlying value of the asset based on the data available. Buying the dip is double-edged advice. On the one hand, you could be getting a discount. On the other hand, there could be a dramatic shift in economics and the constructs of society. When prices go down, you will be tempted. The psychological trick is to go back to basics. Why did you invest? What does the data say about your investment? Has something fundamentally shifted? What does history say? The best way to beat temptation is to do nothing. Doing nothing is underrated. 7. You will become a preacher. We are herd animals. Winning alone isn't fun. You like to invest your money with other people so you can feel socially connected. When your investments do well, you want to talk to other people who own the same assets. It's in your nature. The psychological trick to master is to understand you will preach about what assets you buy. Don't let your belief about what assets you own blind you. Purposely inject the opinions and advice of people you disagree with into your daily life. 8. Purposely cop a big loss. The unconventional psychological trick to investing your money is to cop a giant loss. Wins make you a smart person. Losses humble you. If you want to test your psychology, then purposely make a big loss. It's only money after all. Money won't make you happy. You can't take US dollars with you to the afterlife. The love of your life won't stay with you for your money. I had to lose a lot of money before I ever made a single dollar as an investor. Losses teach you more than wins.